Fibonacci was a mathematician who lived in the 12th century, and he discovered that there were patterns that occurred in nature that would also repeat themselves throughout a number of different randomly generated data sets, including the stock market. It sounds wonky, but it actually tends to be true. Fibonacci retracement is so popular that it's a built-in shortcut in TradingView. If you hit Alt-F and go to the bottom of a move and draw to the top of the move, it will draw the Fibonacci retracement lines for you. And you can see, just by looking at the price action in SPY, that there are a lot of key price action movements around these key retracement line points. You can see that price action here in the 23.6% retracement as you go back into the past. Moving down to the 50% retracement, you can see there's a lot of price action in the past around there too, and that works on and on. You can also draw a Fibonacci retracement in reverse. This will show you where there might be resistance on the way up. So if we start at the high of SPY, hit Alt-F and draw to the bottom, you can see now we've got different levels of resistance. And you can see when we came off the bottom and started to head up that there was a lot of resistance here at the 23.6% retracement that was drawn from the top to the bottom, where there was a few days where the SPY wasn't going to make it above that before it retreated, gained a lot of support, and then broke through. When it comes to Fibonacci retracement, some of the more key support levels are the 50% and the 78.6%. And you can see that replicated here in the SPY, where there was a lot of price action here at the 50% retracement, and then if you move down to the 78.6% retracement, you can see a lot of support there. And just like the other techniques, you use Fibonacci retracement to find buying and selling levels where you're going to want to build your plan in advance.